Today we are very happy to have Mr. Wong Mien, the Chief Executive Officer of TA Investment Management Berhad, to be with us. First, Mr. Wong, although TA is quite well known and is a household name in the stockbroking industry, but I think to the unit trust investor, they may want to know a little bit more about your company background. Can you just let us know mainly what is the management investment philosophy for your TA investment management?
Okay, so for practically TA investment have been quite some time in the market. So practically we have been in the market since 1996, so it's about 14 to 15 years. So we started at July 1st, 1996, which happened to be just 15 years. Okay, so for TA investment itself, actually our parent company is TA Securities. They have been in the market for many times, many years or so. So practically, you want to know the whole group itself under TA. So TA Securities belongs to TA Enterprise. Okay, so in the Bursa Malaysia, actually our company got two listed stocks there, our company there. One is TA Enterprise, and the other one is the TA Global, which is just launched last 1 year. So practically, this is our company, and you can see that we are very much focused on investment itself, from stocks, property, and also unit trust. So we also got futures, and practically it's all on financial services. So under TA investment, we have 18 unit trust fund so far up in these 14 years. So and 2 wholesale fund. So that's what we have. And we talk about Islamic fund, we got 6 funds, which is Islamic funds. Okay.
Okay. With 18 funds and then 2 wholesale funds, so definitely they'll be all under very different investment objective. So how do you manage the risk of your funds? Okay,
so practically for managing the risk of the funds, so first of all we look at our philosophy. Actually is a value. We are actually a value investor, and also practically we also manage some of the beta, beta of the stocks. So this beta of the stock itself, practically we are ranging, we look at the percentage wise, we are looking at beta of 0.9 to about 1.5. Okay, so on top of that, we also actually looking at concentration risk. So for us is that we are the fund managers, we don't actually keep it to the benchmark. That means we still benchmarking, but we are not so much limited to the benchmark. So we are quite a dynamic fund managers. So you can see that our stock itself not actually fully according to the weightage of the benchmark. So sometimes we are lower, sometimes we are more. But for concentration kind of risk, we have to limit ourselves also. We cannot too much concentrated on certain sector or certain stock. So therefore, our risk measurement is 2 times of the benchmark, the maximum we can go for. Okay. So the other one is that we also, that is for investment. Sometimes, you know, as a fund managers, somehow you may have some you thought that the stock may come out, but you have actually misjudged the stock dropping, right? We have a cut loss policy. Okay, so we got internal cut loss policy. Certain percentage we will cut loss. Okay, that's this investment philosophy.
So far, I mean, for first half of the year, right? How are your funds performed? Is it in line with your in-house targeted return, or you perform much better?
Okay, in terms of first half, I think you are quite alright. In terms of comparing to benchmark, like I said, benchmark is for us to see our performance. So far, we are quite outperformed the benchmark. Only thing is that depends on which sector of the funds. I think our majority of self-management actually is local. So local itself, I think the growth also is not so much. So practically every year we are targeting actually 10 to 15%. But you look at first half year, so practically it's about 4-5% kind of return because of the market scenario. Okay, but looking at the second half, we believe that the second half will make a comeback. Of course, because of the economy data is still alright, and also the corporate is still earning a lot of money, and we leave the liquidity because of US and Euro kind of things. I think the money will continue to flow to this area. So anyhow, in this Asia Pacific, and Malaysia will benefit from that. So we think that we will be able to catch up for the 10 to 15% for the year. But you look at last 1 year, actually we achieved most of our fund actually more than 15% to 20% for last 1 year.
So okay, I know this is a very general question, but let's say for an aggressive investor, right, looking to invest for 3 to 5 years, which funds you think is suitable for him? I mean, under your umbrella.
Okay, so practically under umbrella, if the investor is very much aggressive, so in my mind we get about 3 funds at least to go for it. So the first and foremost, of course, we have a recent launch fund, which is technology fund. Okay, look at technology, you can see practically you look at the world itself actually evolve, especially last 1-2 years they evolve very rapidly. Why I say rapidly? Because we are talking from PC based, everybody desktop bound, right? Then it becomes the e-wave, that means the e-commerce and all those things, which is very much still desktop but going through internet. But now the generation will come into I lah. I call it I because most of the thing called I, which it bring the desktop, no more desktop bounds. It's really bring to your personal, beside you. So when you bring to beside you, actually yourself every day can access every information. Even like I don't call E because I-commerce lah. Everything like booking, flight ticket. Next time using the phone itself to make payment, I-payment is also there. So practically it bring to our personal life. Then I call it's a necessity nowadays. So nobody can actually live without the smartphone nowadays. So when you bring to this, of course, a lot of things, especially in business part, the business will come to this. And today I can see iPad, iPhone, iPhone 5, whatever, a lot of people buying. Okay, so and look at the technology sectors. If you look at the technical side, practically their average PE ratio is about 20 times. Look at our top 10 stocks. I'm talking about later on. I mean, technology got top 10 stock, which happen to be Apple, Google, the big major technology stocks. The past 5 years average PE ratio is about 20 times, but the current forward PE ratio is only 13 times. So look at that. Actually, it's very cheap valuation. Okay, in terms of also their power with cash. Somebody I listened to radio also. I think US currently got debt issue, right? So their cash in hand only if I'm not wrong, is announced is 72 billion. Apple itself already got 76 billion cash in hand, actually richer than US government itself. So you can see valuation cheap, power with cash, and recent announcement of the sales result actually achieved more than whatever analysts expected. So the potential is good. Then talk about risk. Risk in technical terms is look at beta. Just now we talk about beta. And this sector beta practically for the past 5 years is about 0.87, which is below 1. So in terms of technical side, the beta is not that high risk. Okay, so plus of course recent round of global branding. Actually top 3, Apple, IBM, Google is the top 3 branding. So when you got a good branding, so they already know that when you got good branding, normally business will continue. Therefore, it's considered resilience in that kind of business. So actually it's a low risk also. Then of course sector is good. How about the fund managers? So I believe the fund manager itself actually having many years since 2000 managing this fund, never changed. So the performance is well, is so-called quite right, because this particular target fund we are going in, a lot of countries actually fit into this fund. So like Singapore, they fit into this target fund. It's Henderson, the foreign fund managers. So practically the Singapore fund actually won Lipper Awards for 2009 and 2010. So they show that they are award-winning fund managers. Okay, so that is what we see. The technology fund will be the way to go, and a lot of the catalyst for the technology fund for futures. The most important thing is all past record, right? But what make the fund we feel that is very good for futures? So practically there's 2 catalysts. One is this corporate spending on technology. Okay, so for the past few years, when financial crisis, a lot of corporation automatically practically is actually keep the money in cash, right? They are not going to spend so much on technology. But with the economy stabilized, I think they need to expand their business. I think they will plug in the money for capital spending. So that part actually will be a catalyst for the technology sector to go for the next few years. Okay. The next one is actually the retail customer base. So for these few years, a lot of emerging countries coming up, like China, India, which is a huge population. They are hungry for technology and they are quite rich because their income level has been picking up. So therefore, they are going to use this kind of technology. Therefore, the retail side also will be improvement because of this emerging country. So going forward, you'll see more and more people using this. I think the technology sector will grow. So therefore, I see the technology sector actually is one for the 3 to 5 years. You are aggressive because the sector risk there. But if you are aggressive, you can the time itself actually will minimize the risk. Okay, that's on technology. The other fund, we got TASI fund. So a TASI practically, why we say TASI, just now mentioned, we believe that for the next few years because of the Euro issue, US got issue, Japan also got their own issue. So the big 4, China is quite actually stabilized, but they are controlling down the kind of growth. So practically, people are fear about China. So the best way or best place to invest is Asia Pacific. And we got this fund Southeast Asia, which is 5 years already in the market. Practically, the record is quite good. Okay, so they have declared last 5 years. They got 3 years which declare unit split. Unit split in Malaysia. Practically, you need to have a 6-month consecutive performance before you can declare unit split. That is already confirmed. The fund's performance consecutively for 6 months for any one of the 1 year. So therefore, Southeast Asia, of course, the story is we invest in Singapore, Malaysia, Thailand, Indonesia, and Philippines. So all these ASEAN countries, what is good about ASEAN, because they are in the middle path of China and also US. If US grow, we also got export, they can benefit. If China grow, I think this region also benefits. So therefore, our fund, Southeast Asia, is quite one way for this investor if they are aggressive. And the fund manager is Lion Global Fund Managers, which is based in Singapore. They have a very good track record. Lion Global have won 77 awards before. Okay, in our fund, just named in year 2009 when market picked up, the Southeast Asia actually have about 69% growth. It's one of the highest in the industry. So therefore, for the past 5 years, this fund itself outperformed the benchmark. And he got about 91%. So he divided by 5 is still simple average about 14%. Okay, so it's Southeast Asia. Another one fund. So why you look at this thing? One is tech sector, one is Southeast Asia, another one is everybody talking about. That is a BRIC. So we got this Islamic BRIC fund, which we believe that going forward, the world actually belongs to emerging country. So therefore, Brazil, Russia, India, China, we believe that it will lead the world to grow because of domestic consumption. So this domestic consumption will help this country to grow. At the same time, will help the world to grow. But our BRIC itself, a little bit special features is that because normally we have feeder fund, all right? But for BRIC itself, actually it's a multi-managers fund with the same fee, with the same cost, but you are able to actually tap into the few fund managers' expertise. So right from the beginning, TA. What TA fund managers will do is that we invest in a stock, we got some advisor, but TA fund manager is looking at this fund, you allocated how many percent actually to Sukuk or bond, we call it bond, or Sukuk market, and how many percent to equity. What is that good about? Because in normal feeder fund, when the market drop, all international fund or foreign fund managers normally they will benchmark, they will put 90 to 95, so it will follow through the market up and down. So for our fund, because the asset allocation is as our fund manager side, we are able to actually cut down the equity exposure when times needed, so therefore to cushion the downside. So that is the part of our fund managers. Then for the investment of the BRIC country stocks, practically we know that we don't have the expertise in Brazil, Russia, India, China. So actually we hire the investment advisor, which is BNP Paribas. They got their own local fund manager in Brazil, China, India, and Russia. So the local fund manager actually that advises us what stock is good. So with the advice, actually we invest to the particular equity sector side. So on top of that, we also got another fund managers, because fixed income also not our expertise, we are equity fund managers. So we actually hired this one, Opus. Opus is only, in Malaysia, is only the only one, he only manage fixed income. So he will manage the fixed income portion. So you can see this fund got so many managers, specialists to take care. And most importantly is that we can actually take care of the market cycle. When market cycle is actually going down, like assuming Euro debt crisis cannot control, I think a lot of feeder fund will be going down, but ours we can control to move it more, this Sukuk itself to protect the downside. So that's why BRIC itself, as you can see, the current scenario is because of commodity drop, actually Brazil, India, Russia is dropping. So actually we believe when consumption is coming back, all this will be coming back again. Actually it's a good opportunity to go to BRIC at the moment also.
Okay, very good. I think Mr. Wong has explained elaborately, so that I think investor now can make a much better informed decision, and probably I think they will look into your funds. Thank you.